Welcome, everybody, and in particular, welcome to our special guest all the way from Vancouver, Galen McNamara. Thank you so much for coming on the webinar.
Thanks for having me on, John. I thought it was an interesting idea when you suggested it, so I'm happy to join you.
You're our first non-Aussie geo on the Lowell Lodestars Drilling Deeper webinar. So I hope we get a few North American audience members tuning in and watching this online later as well. So what promises to be a really interesting webinar. We're going to be talking about a commodity which has got some amazing fundamental drivers in uranium. Just by way of setting out what we're going to do, we've got two or three main sections of the webinar. Firstly, I will say a few things and show a few slides, just setting the background about the uranium market. And Galen has promised to provide some of his insights into the market as well. Then we'll hand it over to Galen for the real meaty bit of the webinar, his career, his insights into exploration, particularly in the uranium sector. And finally, we hope to have time for some good Q&A at the end. Okay, so by way of introduction to Galen, he is Vancouver based, so great that he could come online, and the timing works nicely for morning Eastern Australian time, afternoon Vancouver time, not keeping you up too late. Galen has a storied career, winner of the PDAC Bill Dennis Prospector of the Year award for being involved in a major uranium discovery in the Athebasca Basin in Saskatchewan in Canada. Athebasca Basin is really the place to be for high-grade uranium. Nothing else really comes close. And, the discovery that Galen was involved in is one of the most amazing high-grade discoveries of recent times, pretty much in any commodity, but particularly in uranium. Just by way of background, we will talk a little bit about the uranium market. And here's a couple of charts on the longer term and shorter term uranium market. On the left, you can see the market going back 35 years, a big spike up to $140 US dollars a pound around 2007, when one of the big Canadian uranium mines got flooded. One of the Cameco mines got flooded. And then we had 15 odd years in the wilderness. The Fukushima nuclear disaster was in there in 2011, I think it was, and no one was interested in uranium. Nuclear plants were shutting down all over the Western world anyway. And it's only been in the last 3 years or so that we've seen a bit of a renaissance in the market. A couple of years ago, the price ran up to $100 a pound. It's pulled back to around $80 a pound today. But as we'll go through, the fundamentals for uranium look extremely good. Now, on the right-hand side, there are two, if you like, markets or two prices for uranium. There's the long-term contract price, which is shown in the black line there, which is more stable. And then there's the spot price, which actually makes up a fairly small percentage of traded uranium. But it's really the thing that people look at on a day-to-day basis. And often equity prices are driven off that spot price.
Yeah, I would just say here, I'm looking at that chart on the left, and anyone can see that like, look, yeah, we had the big spike up in 2007, and then it was creeping back up in 2011, then Fukushima. But fast forward to the last couple of years, and like it really appears like what we're putting in here is a new base of support, which I think bodes very well, irregardless of the supply-demand fundamentals that I think you're going to talk about here next.
And I think the incentive price, or the price required to bring new mines online, is a hell of a lot higher than $20 a pound. Arguably, it's 75, $80 a pound, at a minimum, to bring new mines online. So I agree that we're looking at a new floor price.
Yeah.
This is the long-term supply demand. You can see demand there, the black line. The colors are the different geographies of source of supply. Now, the pale blue gray is Kazakhstan, which is like the OPEC on steroids of uranium supply. That makes up, I think, something around 30% of global mined uranium. So it is really the big big elephant in the room. And, when you compare it to OPEC, I think OPEC only makes up about 10% thereabouts of global oil supply. So, Kazakhstan is a very important player. And the next, the other important player, of course, is Canada, which is a market dominated by Cameco. And you can see, supply has ticked up, but there's a massive gap between supply and demand for a long period of time. A lot of that has been made up by secondary supply sources. What do they call that? Megatons to mega power or something like that, converting nuclear warheads into usable uranium fuel rods, and other sources of supply have made up that gap. But largely, the analysis that I've seen is those secondary sources of supply have pretty much been used up. So very hard to know where the gap going forward is how it's going to be filled.
Yeah, and the thing I really like about this this slide, this figure, and it's such a classic figure that we've seen, and it provides so much insight. But I look at the countries that are listed there, and the ones that we call are on our side in the West, like Canada, Australia, USA, and that's it, right? So look at like there's a big things from Kazakhstan there, but it comes back to this fundamental question of where do we want to get our strategic critical minerals and uranium from? Like, who do we want to rely on? Who do we want our partners to be? And I think, like, pretty clearly, it's probably not a country like Kazakhstan for the long term.
The US is a classic example. I mean, the US is the biggest nuclear power generator in the world. The US, I think, uses around 50 million pounds of uranium out of a global market of 170, 180 million pounds a year, and it only produces 1 million pounds of uranium. So it is heavily, heavily dependent on imported sources of uranium. Now, a lot of that comes from Canada. That definitely doesn't make up all of the US supply. So the US is dependent on other non-Western sources of supply, and I think that makes it extremely nervous.
Yes, that's a problem.
That's just another version of the geography of where mined uranium comes from. Kazakhstan dominating, but Canada, the next most significant player. Australia at about 8%, most of that coming, of course, from Olympic Dam. And then uranium market is a complex market. There's at least 3 stages that uranium needs to go through in terms of processing until it is usable in a nuclear power plant. Mined uranium then needs to be enriched, turned into uranium hexafluoride, and then it needs to be turned into fuel rods that can go into a nuclear power plant. And you can see sources of enrichment. Russia dominates the sources of enrichment. So there have been progressive sanctions being applied by the US to Russian enriched uranium, but it's not easy for the US to wean itself off Russian enriched uranium. So you can see that chart, or that pie chart on the right, where the US gets its enriched uranium. 27% of the nuclear supply for the US utilities comes from Russia.
Yeah.
Very difficult to wean yourself off that.
It's very difficult, and I think a lot of U.S. Lawmakers have recently woken up to these facts of life that it's not a level playing field between domestic producers and foreign producers, because the foreign producers, our geopolitical adversaries, act like a cartel and care much more about market share than commodity price. So they've realized that they have to level the playing field, and this $80 billion, call it bailout, to Westinghouse to build reactors, I think maybe is only step one in uranium, but also in other things, and also and a bunch of other critical minerals. There's a huge focus, and mining is actually in the national conversation now, and that's like the first maybe in my lifetime.
Yes, you can't open the paper. Not that people open a physical paper anymore, but you can't read the paper without hearing about critical minerals, and uranium is definitely one of those.
Yeah.
So in terms of demand, you can see there's over 400 operable nuclear reactors around the world. It's growing strongly and makes up about 9% of global power generation. But in the US, I think it makes up about 30% of US power generation. In France, it makes up about 70%. I think France is the energy market with the highest penetration of nuclear power. China is growing massively, and I wouldn't be surprised to see China, in terms of megawatt hours, go past the US in the next 10 years.
Yeah. And I read something earlier, and I think this is right, but I'm not sure, that, AI data centers, really data centers, are going to take something like 12% of power demand by 2030. I mean, like, it's critical that we win the AI race. Like, it's so critical, and all the energy needs that we're gonna, realize to do that we're just gonna have to swallow to do that. Like, there's really only your nuclear energy. That's it.
Yeah, it's a massive jump up in US power demand driven by AI. For example, I think Microsoft has joined the World Nuclear Association. They're really going upstream to source nuclear power.
Yeah. Yeah.
Yeah, we mentioned the deal announced this week that Trump is going to fund or help fund, I think it'll be 10 to 12 new reactors in the US, which is a massive build out given I think they've only built one in the last 20 odd years. And China is the other place. There's 32 megawatts equivalent under construction in China. So yes, that's more than a megawatt. I think that must be gigawatts.
So this here, if China has 32 megawatts, yeah, gigawatts under construction, so that's probably like something like 32 reactors, give or take.
Yeah.
I mean, and we're only talking about here with this Westinghouse deal, like 10 to 12, right? Like, we're way behind, and I think that the politicians have realized that they need to move extremely quickly. So this really could just be the start.
Yeah, I agree. And finally, the other element in the market is the uranium trusts, which basically are set up to buy uranium and sit on it. And SPUT, which is the Sprott Uranium Trust, is sitting on, as I understand it, about 70 million pounds of uranium, which is about 4 or 5 months worth of global demand. Now, that is sort of a stockpile, but it's pretty unlikely, at least in the near to mid-term, to see that uranium come back into the market. They might sell a little bit around the edges to help with their working capital of the trust, but I think that uranium is locked up, and we're seeing more money go into these trusts, and that money go out and buy uranium, which is another source of demand, if you like. I mean, it sits there, it doesn't get consumed in nuclear reactors, but as I say, it's pretty unlikely to see that coming back. So here's the sort of zinger. This is the World Nuclear Association reference scenario. So you can see that red area. That's the gap forecast between supply and demand over the next 15 years. You can see supply growing. I think there are forecasts that Kazakhstan is going to potentially go to 80 million pounds of supply over the next few years. But demand is definitely, even on a base case scenario, there's another scenario which is much more optimistic, if you like, or pessimistic, in whichever way in terms of the supply gap. But this is a reasonably conservative outlook of what the supply gap is going to look like. So the thing about uranium for nuclear power plants is it's an inelastic price. It makes up a fairly small percentage of the operating costs of a nuclear reactor. They have to have it. They can't not, otherwise the plants will shut down. Any final comments from you on the market there, Galen?
Yeah. Yeah, I thought that was a great summary. And yeah, from the supply side, I can say that it's very hard to find uranium deposits, and we've been underinvested in the sector for maybe a couple decades significantly. So there's some catch up to do, and there's a timeline. Discovery for any commodity is not something that we can just like throw money at and then the discoveries happen right away. It takes time and it takes effort, and you don't know when it's going to happen. Right? So it's yeah, it should be an interesting few years for the uranium price.
Yeah, good. Okay, just quickly before we get on to the main part of the webinar, just a heads up about the next webinar, which is on the first Friday in December at 11:30 Eastern Australian time. We've got Tony Manini, who is going to talk about the Sepon copper gold discovery in Laos, and a number of other discoveries that, particularly in copper and gold, that he's been involved in. So please look out for the registration for that webinar. Okay.
I'd actually like to see that one too. I think I'm going to come to that one too. That's going to be a good one.
Good on you, Galen. All right, I am going
you.
to pass it over to you, Galen.
Great. Thanks very much. So, I have to say, like, this is the first time I've ever really thought about putting together a presentation on my my career, and it's just a little strange to kind of think about talking about yourself, I have to admit. But what I've tried to do here is I've got some good pictures, and I'll try to draw conclusions based on my experience and really point towards what motivates me and what some of the strategies are on a high level. But starting off by introducing myself, I'm an entrepreneur and geologist, and really you put those two things together, and that makes me a prospector. And although it's times have changed since the original prospectors were around and out in the bush and in the desert looking for veins and looking for things. The principle is the same. The motivations are more or less the same. The tools are just a little bit different. I have bachelor's and master's degrees in geology from Laurentian University in Sudbury, Ontario, Canada. I'm a professional geologist in Saskatchewan, one of our provinces. And I had a really good education in at Laurentian. It's really one of our exploration schools, probably equivalent to the Codes in Tasmania, if anyone is familiar with that. And it was I graduated from my bachelor's in 2007, and that was a time when, of course, things were very busy in the market, but not many people were in my class. I graduated with 6 people, so we got really good hands-on experience and guidance from some of the best professors in the world for different types of deposits who were very good, and I owe a lot to. Right now, I'm the CEO of Aero Energy and also the CEO of Silver 47 Exploration. But my focus over the last few years has also been to build other companies. So co-founder of Goldshore Resources, which is now Gold X2, has 7 million ounces, give or take, in Ontario and probably going higher. Former director of that. Suma Silver, which was one of the predecessor companies to Silver 47 that we just merged with Silver 47 and Suma. I closed that on August 1st. And a former director, an early director of Sanu Gold, and I stepped off of that one a few months ago. Now has a very interesting gold discovery in Guinea and good cornerstone investments in Montage Gold and Anglo, which looks very good. Collectively, we probably raised over $150 million in the last 5 years for these ventures and deployed into exploration and lots of good drill holes. Of course, not everything is successful, but I think we've done pretty well. Right now, I'm really focused on critical minerals, really precious metals and uranium, in the USA, but also in places like Saskatchewan and Canada, because the prize there is so good, and places like Saskatchewan are still tier 1 places to do business, even though perhaps other places in Canada are a little bit more difficult. I think in Australia, you guys probably feel some of the same pressures that we do politically and in the quote unquote culture wars. But I'm digressing here and focusing on not only discovering but also building through aggregation of projects and putting together companies where there's like-minded individuals to where deals where 1 + 1 might equal 3 or more. The thing I'm best, probably the highest profile project I've worked on was I was a project manager with NextGen Energy between about 2014 to 2018, and I started off as a core logger there. But ended up having oversight of really all of the drilling and hole planning at site, from when it was an interesting prospect to when it was 300 million pounds of U₃O₈ in the ground, and really planned the drill out of that and helped execute the exploration of site at site. Excuse me. A couple photos on the right here. The typical exploration life. We get to lead interesting lives and see different things and see the world, of course. This is a picture of from a helicopter looking at a rig last summer on Arrow Energy's project in northern Saskatchewan near Uranium City. This is a picture of me actually at Aero, and this piece of core here I'm holding is about 80.5% U₃O₈, and we think of this stuff as sometimes being crumbly, but look, that's stick rock. And the only reason it's it's broken where it is because that's where the drillers had to break it as it came out of the core tube just to put it in the core box. So that is probably something that was a fairly unique experience. But also the cultural things you get to see in the towns you get to visit. This is a picture here of the Clown Motel sign in Tonopah, Nevada, which is central Nevada, about halfway between Reno and Las Vegas, where there's a motel there that's totally like crazy clown themed. And you go inside all the rooms and there's clowns with knives and stuff, and pictures on the wall, and it's just, it's just weird. Just weird. But starting more at the beginning of my career, so I was lucky and I had summer jobs originally in Canada. One was in near Red Lake, Ontario, the Confederation Lake Greenstone Belt, where I just helped the geologist work on a drill program for a summer. Another was IOCG exploration in the Grenville province near Val d'Or, Quebec. And like you don't really look for anything in the Grenville province because it's just the metamorphic rate is just so high. But I nonetheless had a great summer working with a local prospector who taught me all about prospecting and staking claims and how he would vend things out. And at one time, he was the largest landowner in all of Quebec because he was looking for diamonds. So I kind of taught me about mining entrepreneurship and how to think about staking claims and how to sell projects, and that always stayed with me. And here I've got like the importance of mentorship. It's early exposure to entrepreneurship, but it's like the importance of mentorship at every stage. Like people say this, and maybe many people on the call think this too, but I can look back to every stage of my career and there's a key person there, that helped me and I learned from. And it wasn't just like one or two people, it was probably 10 people, so that's something I'm very grateful for. A couple photos from this part of my career, here's me in a boat in Saskatchewan. I think this is Saskatchewan, or maybe it's Ontario actually, where of course here I'm Mr. Smart Guy, and I've like, well, I'm going to use my life jacket as a seat cushion rather than actually wear it. But today I would of course wear it. But just the exposure to Canadian exploration culture. It's things like that, and another one here, like this is a bush camp, a drill camp, and this was the core shack. And you see just something that we wouldn't do today is that this is a fuel drum, a 45-gallon fuel drum, and it just perched up on top of some cut logs. And I can't see if there's any secondary containment there below that, but probably not, if my memory serves me right. And like we just would never do that today, right? Sometimes times change and things are already changing, and changing, of course, always change quickly. After I finished my bachelor's degree, I moved to Flin Flon, Manitoba, which is central northern Manitoba. I remember it being two 16-hour days of driving from my parents' house in Toronto, which I did multiple times. But we were doing, and I wouldn't do that drive anymore. It's just, the safety side just doesn't work for me. But we were doing VMS exploration in the Flin Flon Snow Lake Greenstone Belt, and this is the richest greenstone belt on a per kilometer squared basis globally. So it's a great place to learn. I think something like in the between the 60s and the 90s, Hud Bay Minerals discovered a new mine on average once every 4 years, which of course is just like a fabulous result, fabulous success. And this was 2007, so it was a time when things were really crazy in the market, and there was no geologists out there. So myself and my friend Jason here, we were fresh out of school, both from Laurentian. They hired us as project geologists, and they kind of set us loose on the projects. We were managing drill programs, and we're close to experienced enough to be doing it, but we had good support from the guys in the office, and it all worked out. But it was lucky in that we all thought it was going to be a super cycle at that time. Remember that word super cycle? And we're all going to always have jobs. It only lasted 2 years before we were let go, but we got great experience. We had the opportunity to get great experience just based on the fact that we were in the right place in the right time, and that's something that was really really good. And I started to learn about implementing ideas, that we had, and most of them were bad. A couple of them were good. One or two might even have worked out a little bit, but you start to think about embracing risk taking and exploration. There's this general idea in mining, like we're de-risking our projects, and that's great at a stage, but exploration is in nature a risky endeavor. So you have to embrace that risk, but do it in a way that is based on experience, right? And that's a little bit of the secret sauce that you can't really quantify, I think. And again, here, the importance of mentorship. We had great bosses at this company called Arrow Resources, that I still see around and think very fondly of. So the pictures here, us standing in front of a drill rig. Again, the thing I like to point out, we were a little bit cavalier in that, yeah, we're not standing close to the rig, and we probably don't need to be wearing PPE here, but like we're not even carrying it, right? And again, something that probably wouldn't fly today at all. Here's a photo of Flin Flon, Manitoba. It's hard to see this because it's of course wintertime, but it's a city because of the smelter that was there. Really, at that time, nothing was growing, so it was a bare kind of moonscape landscape with no vegetation on the outcrops and a big pit, right. Was extracted from this pit, 50 years prior to when I was there. And then after that, I went and worked for Lowell Resources, based in Saskatoon, Saskatchewan, and we were working at the CB mine, which later the company was just after I left, or a couple years after I left, maybe was taken over by SSR, based on the discovery that the company made called the Santoy Gap deposit, which is now in production. And here is like working in the mine site is just very critical for young geologists because you get to really understand that exposure to the actual what works, in terms of an exploration target. You really get to separate things that on a target perspective that we should care about as exploration people, and things that are kind of just like science projects, low degree of, you might have a technical success, but low degree of something, being commercially viable. And that was really interesting. We've got here that Santoy Gap thing that I worked on with the guys here. I think really was the impetus to SSR buying that company. And there's a nice core photo here from some of the earlier drilling where like that's a nice band of visible gold. There you can see it all, which is pretty cool. And standing on one of the vein exposures at surface with the rest of the exploration team. This would have been about 2013, and this is one of the veins that make up this mine complex. But the actual Santoy Gap deposit, I think I remember going to see it, and the surface expression is not this wide. This is say 3 meters wide. The surface expression of that deposit is actually something like this, right? So it just goes to tell you you might see something at surface that's 20 grams per ton of this, but might open to 20 meters wide, 200 or 300 meters below it as the foliation rolls over, and there's some space for things to open up. And that there is like the key observation that sticks with you for forever after you kind of realize that. And then from there, again, like we as a geologist, you're working in cycles. So we all got laid off from that job. But that was just at the time when NextGen was getting really its start and had a good sniff in early 2014. So myself and a couple of colleagues and friends went and worked for NextGen and helped grow the team there and really helped manage that and plan the early step outs and drill out of Aero to 300 million pounds. And there's a couple of interesting stories that I think I can share here from my personal experience there. And one was a time when it was a very interesting prospect, but it was an interesting prospect. We haven't hit any massive pitch blende yet. And I was at camp, and the driller told myself and a friend and a colleague, I think we might have hit something out there. You guys might want to go out and check it out, but I don't know. So we drove out. It was a beautiful summer day, windy northern Saskatchewan summer day, and we drove out in our side-by-side. We got out of the side-by-side, and you had to walk up a hill maybe 200 meters. It was too rocky to drive up. And for some reason, my friend decided to turn on the scintillometer as we were walking up the hill. And we got maybe halfway up it, and the thing starts to perk up. You hear it start to beep, right? And we got a little closer, and it starts getting louder. And we're kind of looking at each other like, you've got to be kidding me. And then we get really close, and it's maxing out. So we open up the core boxes, and there of course are two nice pitch blende veins in a box or two boxes of core. One's maybe 1 meter wide, and the other's maybe half a meter wide. Nice black pitch blende. And we thought, okay, well maybe now we're wow, right? And then another time, and this was another interesting one, another a right place at the right time, I guess, for me, where we were drilling. This was probably the next winter, maybe 8 months later, where we had a few more holes, got some more of that massive stuff, there was a really good vertical hole that was probably down dip that really hit. So we knew that the potential was still there just based on that extension of that, that full extent of that long hole, even if it was in the wrong direction. So we got to drilling these holes, and the way it was that if a hole, the survey information on the hole was wrong, like it was pointed in the wrong direction after 60 meters, we would turf the hole and start again. And because you had to drill through like 60 meters of overburden and then another 60 meters of cover rocks so it was 100 meters before you got that first survey. And that took like probably a day and a half or a day, 24 hours. So 2 nights in a row, I had got that survey data at 3 a.m, plotted it up on my computer, and had to say like, no, we're going to twin another hole, like stop. Right, try it again. And the third night, it was pointed into like an area that we weren't targeting, way off to the right, in like way off, something that would have been a really big step out. And I just thought, okay, well, let's go for it. And the drillers were very happy. They got to actually make some money, make some meters. And a couple days later, when the hole got down to around target, I got a call from one of the geologists in the core shack, and he said to me, I think you might want to come down here. There's something interesting you might want to see, just maybe. And I knew in the tone of his voice, he was a good friend of mine, and to this day still is a very, very good friend of mine. And we laughed about this because I like ran to the core shack a couple hundred meters. I just knew it was something good just by the tone of his voice. And I got there and there was a full table, maybe 60 meters of massive black pitch blende, out on the table. That was wild, right? And that's something that stays with you for forever. That's probably a once in a lifetime experience, which was great. But continuing on the path here, it quickly expanded to 6 and 8 rigs. And one of the things that we did that really helped save money, but not just save money, was great for efficiency, save time, was the implementation of directional drilling methods. And directional drilling, and what you do is you drill one mother hole or pilot hole, and then from there you can drill branches off of it. So you save all of those upper meters. You save the time you have to drill those, you save the cost, and you get really total pierce point control. You can really get a hole to within like a meter of where you want it to go, which is like greater than the precision of the survey tool, right? So that really, I think in 2016 we probably saved like around $10 million just by implementing directional drilling, which was really good. And I'd like to, so that's like something that is definitely an application, a really like real world application. But I mean, this is like the apprentice phase of my career, where it's like you're starting to implement your exploration ideas and having some failures, but also starting to have some successes and really start to understand the types of risks that you want to take. And the last thing just about, that stuck with me is that at Aero, I saw a massive pitch blende 800 meters below the unconformity. And up until that point, like that would have been unheard of. So that like opens up a whole new search space around the basin, right? That I'm thinking about today. So that kind of comes now to like, that was the apprentice phase. And now we're into a little bit of the implementation, the building phase, which I hope of my career, and try to apply the lessons learned in uranium on the western side of the basin at Aero to other areas. And that takes me to the Aero Energy, where we're looking at a project on the north rim of the basin that's near Uranium City. This was a place that in its time in the 50s there was a big uranium rush. The Gunner mine was at one time the largest uranium producer in the world. We're looking really, it's like looking for fingerprinting what I've seen before, and similar trends and shallow targets, extensive historic exploration, but it was looking for a different style of mineralization. So like the wrong rocks from what we would be looking for today, but not the wrong rocks for them. Maybe that's not fair. And in the modern environment, the targets are much less tested. And one thing I've noticed, when you have some of these ideas, like a lot of times in different environments, you won't really be taken too seriously by the exploration establishment, And I don't know if that's necessarily a good thing, but if you're ever in that situation, like don't worry about it. If you have ideas that you think are good, they're good. We had a nice proof of concept discovery in 2024, 8.4 meters at 0.3% U₃O₈ with our partners. Our exploration partners are at Fortune Bay Corp. It's not a joint venture. We're earning into a portion of the project, but they're our partners. We drilled around it. It didn't really pan out the way we would have thought, but it's in the right rocks. And that hole is actually, I believe, right on par with NextGen's first discovery hole. So like they're right there. It's just we need to find the right trap on the project. And I'll get into a little bit more detail on that. Yeah, and this area just generally has a great personal connection to me, Uranium City. My cousin was Gilbert Labine. He was a prospector. He built the Gunner uranium mine and put it into production. It was at one time the largest uranium producer globally. But his other mine before this was at Port Radium, Northwest Territories, which he discovered via prospecting, which was supposedly like an epic of human hardship, of like walking across Great Bear Lake with a sledge and pulling it with all his gear and making it, in late winter, making the discovery. But that at that time it was a radium discovery, and uranium was just like a useless byproduct. So he kind of had to sit on it for some time, at least the uranium. But that was, then World War II started, and all of a sudden there was this big demand from the U.S. government for uranium for their Manhattan Project. So it was uranium from that mine, a lot of it, that went into those first bombs, the Trinity test, and the bombs that were eventually, unfortunately, dropped on Japan. But bringing it all back to, Uranium City, that's just another reason why it was just very interesting for me to work on it. Okay, but specifically about the projects, here we're showing our projects up near Uranium City, and Uranium City is up here underneath this label. But what we're looking at here is about a 30-kilometer trend along which there are multiple areas of mineralization, but largely in what we wouldn't look for today. Where you can go and sample 9.5% U₃O₈ in the sandstone above the unconformity, which is interesting. That was drilled and nobody found anything in the 70s. But again, smoke. Move up trend to the northeast and you start to see things like, there's 8% in a boulder, 6.9% on surface. There's radioactive springs right above the good target rocks, the good graphitic conductors, that you get 15,000 counts per second in a radioactive spring. So it's like, okay, well, we know the system is here. We know the pathways for the uranium mineralization are active, and we're active. Now the question is, okay, well, where's the trap? And the other nice thing about this project is that, like, here's the rim of the basin. So to the north, we're outside of the basin. So you're right into, you don't have to drill through 200 or 300 meters of sandstone to get to the target. Like, it's right below the overburden there, which might be 2 meters, might be 20 meters, something like that. And then you come back to the idea that, okay, well, I know there can be a massive pitch blende up to 800 meters below the unconformity. I saw that at Aero. So that, like, opens up, even though this starts to get 10 or 20 kilometers away from the basin edge, fine. You have to think back in terms of in 3 dimensions, and where was the basin when the mineralization when the mineralization happened? Was it 800 meters above us? Probably not. Probably not. No. This is very shallowly dipping contact. And coming back to this idea of, okay, well, right rocks versus wrong rocks, like, there was a good amount of uranium production from this district going back to the 1950s in the prospectors, but that was just what one guy could really walk over and prospect that surface. So you see things on high ground in largely in granitic rocks and granites that weather high, that a scintillometer is going to pick up and a guy can start digging, and if he's really lucky, it's going to be a mine. There's lots of that stuff around, and some of them are actually pretty big. But what he can't see, what he wouldn't even have known about, what we look for today, of course, are these graphitic fault zones. Graphite likes to soak up uranium. It's a sponge for uranium chemically. And because they're softer, they weather low. So you're just not going to see them down here if you're just a prospector. But with the tools we have today, we know that they're there. Our partners at Fortune Bay, Dale Varan and Gareth Garlick, did that legwork to come up with these targets and got some sniffs on some of the holes that they drilled as well. And there's dozens of targets, right? And the nice thing about this is that, again, coming back to the cost per test theory metric, is that since you don't have to drill below through 200, 300, 400 meters, 500 meters of sandstone, your cost per test is very low. So you can test one of these ideas for between 100 and 150,000 Canadian, which I think is best in class. But again, how does something like this compare to where we know there's world-class mineralization? So this is on the other side of the basin. This is the Patterson Lake corridor, where the first discovery, of course, was RRR, followed by Aero, and then followed by Spitfire, which is an interesting zone up here to the northeast. Well, in there's something like now 450 million pounds of uranium, and just look for similar patterns, right? Like, it's the same oriented structure, like big structure that is crustal scale. We know we've got lots of smoke all along ours. It's just a matter of now, like, where's that trap, and that's what we're trying to look for. Okay, so that's Aero. Let me switch gears a little bit and talk about Suma Silver, and now called Silver 47, but I founded Suma Silver, and this is where we're really looking at the southwestern United States for precious metals. And I originally got interested in these historic Wild West mining districts when I went on a student trip in like 2011, and all these companies took us to all their mines, and we spent like 10 days, and they were all happy to show us around, these big mines, the Big Gold Quarry Pit, the new one that Barrick has, Cortez Hills, and several others that were great. And we got to see a bunch of these historic mining districts, and I just thought, yeah, there seems to be a lot of potential here that everyone notices, but I was ignorant to before that. So it was that, and then I also got quite interested with the discovery, Mag Silver's discovery in Mexico. where they kind of stepped out from where a big mining district based on a new idea and had great success. So, I've spoken to Peter about that, and it's a really interesting story. And then the other thing was that I by chance had a dinner with the CEO of Silvercrest at the time, and he was telling me about their vein fields in Mexico that, the work that they had done there and their approach, and that also stuck with me very much. And again, when we first started putting these things together in Nevada, like I wasn't taken too seriously by the local establishment. Like, oh, it's all mined out, like et cetera, et cetera, et cetera. That's fine. But what we found was a little bit of a key to unlock value was that the 3D data compilation was really a critical step in mature search spaces. So in the Tonopah mining district where our Hughes property is, we found all of the old underground maps from the USGS in one of the universities there. They're actually the University of Nevada in Reno. This was one of the first districts that was mapped by the USGS in 1935. Before this, the guys would just mine and they wouldn't take any records. But here they had good records. We knew where all the veins were. We knew where most of the mining was. And when we put it all together in 3D, it was just very insightful of where there's parallel things that they didn't get to, extensions that they didn't get to, et cetera. And we had a proof of concept in the first hole of 18 and a half meters of 286 grams per ton silver and 3.1 grams per ton gold, which is something like 500 grams per ton silver equivalent or 550 grams per ton silver equivalent, which is what we report in. Please excuse me. And I just really like the history of these places here where, this is the discoverer of Tonopah. That's him, Jim Butler. That's his wife there. And supposedly he found the district, the veins, because he was traveling from his ranch to some other place in the desert in central Nevada, the high desert. And he camped overnight where the veins were, and his donkey had walked off in the morning. And when he went to find the donkey, he picked up a rock to throw at the donkey. He noticed it was unusually heavy, and that was the ore. I don't know if that's real, but it certainly is a great story. And then down here, this is from our Mogollon property from the early 1900s. This is a parade on Cinco de Mayo. There were many Mexicans. This is New Mexico, but there were many Mexican workers there. And the main vein in the district is just these cliffs behind the buildings going left to right. These buildings are actually still there today. You can drive down the street today, and it really is eerily feels like you go back in time. And that's part of the appeal to me personally, is being able to add value to these districts. What we're really concentrating on, though, now today at Silver 47 is the Red Mountain project in Alaska. This is a VMS district. It's got two deposits on it, about 3 kilometers apart from one another, totaling, and we use silver equivalent, but this is really a polymetallic deposit. But so bear with me, it's 168 million ounces of silver equivalent material and 15 million tons of ore at a grade of about 335 grams per ton. That's just something that we just finished drilling this summer. Here's a long section. So this is surface here where my mouse is. And then all of these dots are where the drill holes come through the page. So just concentrating on adding ounces within the deposit in terms of high grades. And then there's another one we're stepping out on. As this deposit is very open in both on the deposit scale, which is great, but also on the property scale. So, coming back to big picture approach, like this is a 60-kilometer trend, and we have most of the VMS perspective rocks, like the vast majority. And if you look around here, all of these are different showings, where you get like 16% copper, 20% lead, 1,200 grams per ton silver in grab samples. But the vast majority of these aren't drilled, and where they are drilled, you get things like 2 meters of good grade, and it just hasn't been followed up. So this summer we're going to get back here and continue to drill up both of these deposits, Dry Creek and West Thunder Flats. But we're actually going to get to test some of spend a good probably one rig season, a few months with a rig of testing these other ideas and prioritizing them and seeing, is this a real VMS district? Like this 60 kilometers is about the same strike, the distance between Flin Flon and Snow Lake, and that's the richest greenstone belt in the world, except this isn't explored. Okay, and a couple of our other projects, just to very briefly, this is the Tonopah Mining District, the Hughes property. We called it the Hughes property because it is formerly owned by Howard Hughes. So that's just a tip of the cap to the history. It's a very rich history. Some interesting drill holes here on the left, but I just like to concentrate on the map on the right. So these two targets here, Murray and Belmont, these two polygons, this is where most of our work has been done. It's the historic part of the district, in the heart of the district. This is where there's a resource here totaling about 44 million ounces. This is where the most of it is, right? But that's only really half the story. The other half of the story here are these targets out to the east. These. So I'm just flipping to look into long section view. again, so what happened here, to put this into perspective, is okay, the veins ran this way, left to right, west to east, and they ran into a fault zone here called the Halifax Fault, and the old time miners more or less lost them on the far side of this fault. But there's no reason to suggest that they didn't continue. So we've drilled, this needs to be updated. There's actually a few more holes out here. We've drilled, I think, 9 holes out here now, or excuse me, 12 holes out here now. All of them except one have hit something. The best one being 1450 grams per ton silver equivalent over 3 meters. But there's a lot of stuff that's narrow, like a meter, 2 meters of 390, 500. So the big question is, okay, well, where's the main vein out here? And why should we care about that? Well, to the left of this fault, there's a total endowment of about 500 million ounces between what we've drilled, what's been mined, and what a neighboring company has drilled. 500 million ounces over 4 kilometers. Well, this is 4 kilometers target here. So if we can get onto the main vein here, and we're going to test this winter, well, then, it's a really big game-changing target of high-grade ounces in Nevada. So that's why we like this project. I'll just continue.
Galen, we've probably only got a couple of minutes, and then we'll try and squeeze in a few questions.
Okay, great. Yes. Okay. I just need to figure out how to trash these. This is the last target. The other one that we're looking at, working on, is Mogollon in southwestern New Mexico. This one has a 32 million ounce silver equivalent resource on it, gold and silver, incompletely covering this area here. Well, I'm just going to slip to the next slide and show the potential. That was this area. This area here. Zoom out, and there's another something like 75 kilometers of vein and prospective structure on the property where you can go and sample them, and you get like hundreds to thousands of grams per ton on surface. Not really explored, probably akin to some of the famous Mexican districts that go back 500 years. Yeah. Great. Some photos from New Mexico. That's a rock tomb. The discoverer is buried inside there after it was ambushed by Apaches, actually Victorio and maybe Geronimo. During the time that that was a problem, there was conflict. So just another strange history. But that's it. Thanks, John. So excuse me if I went too long.
No, not at all, Galen. That is fabulous, fascinating couple of companies and fascinating history and career history as well. So thank you very much. We'll quickly just turn to a couple of questions that we can perhaps cover off on. Just in terms of uranium, is there enough people, talent, and building materials in the world to build multiple reactors? I guess that means, can we build enough reactors?
That is a really good question. And in the US, we used to not be afraid to build things in both of our countries, maybe in all of our countries, maybe in Australia too, like big projects, like transnational railway projects, big hydroelectric dams, big reactors, right? But there's a manufacturing expertise that's now lost. But what I think helps fix that is if we can get SMRs right and modular builds right, then I think we're on the track. That's much simpler.
Yep, that leads into the next question from Adrian Eschman. Keen for views on Australian appetite to develop uranium deposits, and then further on using small nuclear reactors, the SMRs. I guess, Galen, you're probably not got too much background on the Australian appetite for uranium development, but just a quick comment there. Obviously, there's a couple of key states similar to Canada, I guess, a couple of key states that are pro uranium mining. South Australia in particular, has the Olympic Dam, big Olympic Dam uranium and copper mine. But there's a number of states that will allow you to explore, but they won't allow, if you find something, you're not allowed to develop it. And that in particular, that's Queensland and WA. So yeah, I think, SMRs, Galen, you mentioned them as perhaps one of the keys to unlocking, more nuclear power. And I think, with Australia having a policy of not having any nuclear power at the moment, maybe SMRs are the way into nuclear power for Australia. And then I think we had one question. I'm not quite sure which company it relates to, but it just said how long for profit in the company. Galen, I guess perhaps one way of looking at answering that is what did the share price do at NextGen on the discovery of Arrow? How much did it go up by? Do you remember?
You know what? It was 20 cents that was at the beginning to to where did it touch? $12, you know? But I will say that there was a time when we're at the company, we understood the size of the discovery and the potential, but nobody else did. So, I mean, if you can kind of crack that code, there's good investment opportunities out there.
Yeah. Yeah. And just we were talking earlier about the announcement by Trump this week of the $80 billion going into nuclear reactor builds. And that really kicked up the share price of Cameco. I think Cameco went up 20 or 30% on the back of that. But we haven't really seen yet the share price reaction in the junior explorers. Any comment from you on that?
Oh yeah, that's a great question, and we've seen this across multiple cycles and multiple commodities. You know, you see the investment interest really at the beginning of bull markets really starts with the bigger companies, right? But when the bull markets get, you know, going a little bit, and we all believe that they're going to last, well, the investment dollars then flow down to the smaller caps, and those are the ones that have the greatest torque, right? Especially, you know, in rising tides will lift all boats, but if you can pick the right stock, the right company that's into a discovery, well, then you can really like amplify those gains in a way that is potentially life-changing.
Yeah, and hopefully we're going to see that coming in the uranium sector, and also, you know, the precious metal sector as well. I think we've got to wrap it up. There's a poll that's just popped up on my screen. I think the audience members will get that as well. So if you have a chance just to provide a little bit of feedback, that would be great. I really want to thank you, Galen. Great to have a North American perspective on the webinar. You know, it's all been Aussies so far. So thank you very much for making the time all the way from Vancouver to give us some history and some really great current things that you're working on. Obviously, those companies are listed on the TSXV. I think they both listed there. If investors, you know, want to have a look at those. You know, the Lowell Resources Fund is invested in Aero Energy and pretty excited about the uranium prospects there. And I think Suma Silver 47 also looks definitely worth a look. So yeah, you know, just a reminder that next month we have Tony Manini on the first Friday in December at 11:30 to talk about copper and gold. Please look out for the registration of that. And once again, Galen, you know, many thanks for your participation.
I'm happy to be here, happy to help, and thanks for including me.